Hello! Bailey is still super concerned about the risk from the private credit market, and Jamie Dimon called failed lenders cockroaches because when you see one, there are usually more to follow. It's Friday the 10th. I'm FxPlew and this is the market brief. So Bailey has been on. He was speaking to the European Parliament yesterday, and he warned of a double whammy risk where volatile markets now coincide with a private credit sector that has never come under any real stress. The sector covers about $3 trillion of relatively opaque lending, and Bailey has been banging the drum for stress testing and tighter controls for quite a while now. Meanwhile, Jamie Dimon off of JP Morgan was referring to the failures of Tricolor and First Brands when he made his cockroach comment, but there are suggestions that First Brands may have used the same invoices to access funds from several different private lenders. So you can see why Bailey wants to tighten up regulation on that sector. Pressures from bad debt are rising, and the average SME is owed over 60 grand in unpaid invoices. So you can understand the rising demand for factoring when cash flow remains king for the SME sector. But at the same time, there were just shy of 1,900 insolvencies in February, which was up 7% from January. And that risk is what Bailey keeps banging on about, because somebody will be left carrying the can. Over in the US, the Fed minutes were out on Wednesday, which showed increased interest in a rate hike. They retain a relatively high bar for tightening monetary policy, but the fact that they're discussing it again tells us a lot about where US inflation is heading. Kevin Hassett has been on. He is highly confident that Warsh's confirmation hearing will happen in May, but it could even be as early as next week. Warsh may have his work cut out to keep Trump on side, though. He needs to deliver on his promise of rate cuts when he takes over from Powell. The Fed is discussing rate hikes. February PCE was 0.4% for the third month in a row, and core PCE is double the target. Expectation, of course, is that March data will be worse. Q4 GDP was revised down again. The revision shaved off 0.2%, bringing Q4 down to 0.5% growth. And that was before the war in Iran. The dollar has pulled back since the truce. The dollar index closed at 98.80 yesterday. Sterling kicks off this morning around 134.20 against the dollar. We're fairly flat against the euro, around 114.80, and euro dollar is around 116.85 on the open this morning. So that's it from me, capping off another week. Thank you for joining me once again. Have a great weekend. We'll be back to do it once more on Monday. All the best.
If you do not have a clue, then just tweet through and ask FxPlew.